Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 23rd. I'm going to take just a brief moment to discuss what markets did last week as well. We continue to have a very resilient market with the S&P 500 up 1.7% on the week. The mid-cap index as measured by the S&P 400 was up 1.96%, and the winner on the week were the small caps as measured by the S&P 600. They were up 3% even on the week, which is great, with the small caps being the leadership as they have been lagging behind year to date. And what has been the reason why we've moved higher over the last couple of weeks? And that's been the advent of, we've started in earnings season. So we're like in the first quarter of earnings season, but the good news on that, or about that, is of the companies that have reported so far, 86% of companies are beating on the bottom line or beating their earnings estimates. Now, the market was moving higher and continue to move higher off of these earnings reports that we've been getting from the banks and some technology companies, and that kind of came to a head yesterday, Wednesday, when after the bell Tuesday, Netflix reported an earnings miss due to a tax issue in Brazil. But because of the earnings miss, that sent Netflix down yesterday 10%. And you saw the start of a pullback in the equity markets. Another thing that's been going on during this time as well that's been a catalyst for stocks to move higher is, if you've been paying attention to the 10-year, it actually dipped below 4% and is hovering right around 4% as we're talking today on Thursday the 23rd, that it's right around that 4% handle. Now, interest rates falling back are a good boost normally to equities as long as the underlying economic conditions remain intact and that the interest rates aren't pulling back because investors are overall fearful of a very big economic slowdown. Then that would have a negative impact on stocks. So the earnings have been very good, and that's been one catalyst to keep this market moving higher. We're in one of the longest government shutdowns that we've seen. We've had some other walls of worries that we've overcome during the government shutdown, with trade issues with China and back and forth with China, that the market is overlooking these issues and is relying more on the corporate earnings and the guidance from these companies and the future of artificial intelligence and the potential that lies around that is really the catalyst that is keeping this market moving higher. So what do you do as an investor as the market just keeps powering higher? When is the right time to get in, and how do you manage through that? Well, dollar cost averaging has been a proven tactic over time to just kind of pick, whether once a week, twice a month, when you get paid, however that is, to allocate a certain dollar amount and allocate those out to equities accordingly, diversifying those amongst sectors and equities as well as different individual companies. So that's one way of doing it as well. And then other ways are just being patient. If you have a lot of cash on the sideline and you're a little hesitant, you can just still remain patient and then wait for these little pullbacks like you see yesterday when you have a 0.5% pullback in the markets. Be mindful that we need to understand what the underlying economic conditions are. They still remain, from what we see, somewhat strong, and what companies are reporting, they're somewhat strong. We are starting to see, however, signs of weakening in the lower end consumer. Auto loan delinquencies are starting to creep up, as well as credit card balances are starting to creep up. So these are things that we're monitoring at River Place and looking for as signs for the market moving forward. But corporate earnings continue to remain very, very strong from what we've seen so far. We don't anticipate that being any different as we move forward through the rest of the earnings season. And so what we're looking for is the guidance, and we're paying close attention to that. So anytime you have questions about how to navigate this market or what to do for you personally, we'd love the opportunity to speak to you. You can reach us at 904-346 3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.